Have you ever wondered what the future of treating brain disorders looks like? We're talking about conditions like schizophrenia and the psychosis that can accompany Alzheimer's disease. For decades, the go-to treatments have revolved around dopamine, but they often come with a heavy price and side effects. Well, a company called MapLight Therapeutics is trying to change that, and they just made a splash on the stock market. Today, we're diving deep into MapLight, their promising new drug, and what it could mean for millions of patients and investors. MapLight Therapeutics, now trading under the ticker MPLT, is a clinical-stage biotech company with a laser focus on creating better therapies for central nervous system disorders. They recently went public, raising nearly $260 million in an IPO. What's really interesting is that they managed to do this during a US government shutdown, making them the first biotech to list under those tricky conditions. Their initial public offering price shares at $17, giving the company a valuation of around $700 million. Now, for those who follow biotech financing, you'll note this is a slight down round from their previous private valuation, which reflects the tougher market conditions for biotech companies right now. But despite that, they've successfully extended their financial runway all the way to late 2027, thanks to the IPO cash infusion. This is crucial because it gives them the time and resources they need to hit their next major milestones without scrambling for funds. Some big names are involved here, like Sergey Brin's Catalyst for Fund and Novo Holdings, although their stakes have been diluted post-IPO as expected. So what's all the fuss about? It really comes down to their lead product candidate, a compound called ML007CMA. This isn't just another me-too drug. It represents a fundamentally different approach to treating psychosis. Instead of targeting dopamine receptors like traditional antipsychotics, MapLight's drug is a dual agonist that activates to specific muscarinic receptors in the brain known as M1 and M4. The theory is that by hitting these targets, they can improve not just the psychotic symptoms, like hallucinations and delusions, but also the cognitive and negative symptoms of schizophrenia, things like social withdrawal and difficulty concentrating, which current drugs don't treat very well. To make the drug more tolerable, it's combined with another agent that blocks its effects outside the brain, aiming to minimize common side effects like dry mouth and upset stomach. This unique mechanism is being tested into major areas: schizophrenia and Alzheimer's disease psychosis. For the millions of people living with schizophrenia, this could mean a treatment that helps them think more clearly and re-engage with their lives. And for the significant number of Alzheimer's patients who experience psychosis, it could offer a much-needed, safer alternative. If successful, ML007CMA could lead to better patient adherence, fewer hospital visits, and a dramatically improved quality of life. Let's talk about the market opportunity because it's massive. Globally, about 20 million people have schizophrenia. In the US alone, that's 3 million people. And when you look at Alzheimer's, about 20% of the 6 million patients in the US experience psychosis. These are chronic conditions requiring long-term treatment. A new, effective, and well-tolerated oral therapy could capture a significant slice of this market. From a healthcare economic standpoint, a drug that keeps people out of the hospital and improves their daily functioning is a huge win for everyone: patients, caregivers, and insurance payers alike. It could translate into more quality-adjusted life years for patients, which is the gold standard for measuring a treatment's value. Now, MapLight isn't alone in this space. The muscarinic pathway is making a major comeback in neuroscience. Bristol Myers Squibb, a giant in the pharma world, recently got approval for a drug called 𝗕𝗥𝗣𝗘, which also targets the M1 and M4 receptors. So MapLight will be facing a big competitor right out of the gate. However, this also validates the scientific approach. MapLight believes their candidate, ML007CMA, can be a superior option, potentially through better receptor targeting, a more convenient extended-release formulation, or a cleaner side effect profile. If they can prove even a modest advantage, they could carve out a very profitable niche for themselves as a best-in-class, second-to-market therapy. From a financial perspective, the company looks to be in a solid position for the near term. The IPO proceeds give them enough cash to get through their critical phase to clinical trials, which are the real make or break moments for a company like this. Their current $700 million valuation for a single lead asset in phase 2 shows that investors are cautiously optimistic. They see the potential, but they're also aware of the risks. Our due diligence shows a company that has been executing well with backing from smart, experienced investors. There are no obvious red flags, but the simple truth is, the clinical data isn't in yet. The entire investment thesis hangs on whether their upcoming trials prove that this M1/M4 dual agonist approach actually works in patients. So what could MPLT look like in 5 years? Let's run through a few scenarios. In our base case, we assume their phase 2 trials are successful. They move into larger phase 3 studies by late 2027 and eventually get FDA approval around 2029 or 2030. In this scenario, with peak annual sales potentially hitting $1.5 to $1.7 billion, our model suggests a fair share price of around $30 to $35. That's roughly double the IPO price. In a more optimistic scenario, if the drug proves to be significantly better than the competition and launches smoothly, peak sales could climb above $2.5 billion. This could push the share price towards the $40 to $45 range. Of course, we have to consider the downside. In a conservative scenario, if one of the indications, say Alzheimer's psychosis, doesn't pan out, or the launch is delayed, peak sales might only reach about $1 billion. This would bring the fair value back down to the $15 to $20 range, closer to the IPO price. And then there's the failure scenario. If the phase 2 trials fail to show a clear benefit, the company's valuation could plummet, potentially falling below $10 per share. This is the binary risk inherent in biotech investing. It's high risk, high reward. For investors, one way to think about this is through instruments like contingent value rights, or CVRs, which could pay out bonuses if the company hits specific milestones, providing some risk protection. This brings us to the key catalysts. What should you be watching for? The most important dates are in the second half of 2026, when we expect the phase 2 data for schizophrenia to be released. This will be the first major test. Following that, in the second half of 2027, we'll see the results from the Alzheimer's psychosis trial. These 2 data readouts are the most critical inflection points for the company's future. Positive results could send the stock soaring, while negative results could be devastating. Looking further out, we'll be watching for the start of phase 3 trials, potential partnerships, and eventually FDA submissions between 2029 and 2030. Let's be clear about the risks. CNS drug development is notoriously difficult. Many promising drugs have failed in late-stage trials, and muscarinic drugs have a checkered history. MapLight has to prove their science works in large-scale human studies. Commercially, they'll be up against an established player and will need to convince doctors and insurers that their drug is worth a premium price. And like any development stage company, they're burning cash and may need to raise more money in the future, which could dilute existing shareholders. So what's the final verdict on MapLight Therapeutics? MPLT offers a classic high-risk, high-potential biotech investment opportunity. They have a differentiated scientific approach targeting a massive unmet need, strong financial backing, and a clear development path ahead. However, their current valuation already assumes a decent chance of success. The story of MapLight over the next few years will be written by its clinical trial data. If you're an investor who is comfortable with the binary nature of biotech and can stomach the volatility, MPLT represents a fascinating, speculative play with the potential for significant rewards. A positive phase 2 result could easily double the valuation, but a failure could cut it by more than half. It's a compelling story, and we'll be watching those upcoming catalysts very closely. What do you think about MapLight's approach? Is the muscarinic pathway the future of antipsychotics? Let me know your thoughts in the comments below, and if you found this deep dive helpful, please hit that like button and subscribe for more content on the most innovative companies in the market. Thanks for watching and see you in the next video.